Welcome to another episode of Asset Coach and Tax Strategist. Thanks again for being a subscriber. If you haven't subscribed, again, hit that bell. And this is the third part of this three-part series, if you will, that we're talking about money. And most importantly, because of this war with Iran. Now, this episode, I recorded it a few weeks ago, but it's the point of the episode is still true. I want to make sure that that's clear. It's not a just in time. Oh my goodness, there's a lesson here that I want you to understand as we continue these conversations about what you should be holding in physical, real assets and not paper money, that sort of stuff. So let's dive into this. And really, what's happening at the time of this recording, we're looking at the beginning of March, right? We're a few days into the war with Iran. And so Iran's striking other countries, right? They're bringing other people in that have U.S. bases, all this kind of stuff. And it's only a matter of time, right? Unless Iran's been spending, since Obama, shipping billions of dollars of cash to them, helping them build their nuclear machine. Maybe they've been stockpiling so much ammunition and so much over the last few decades that this is going to be extended a long period of time. Depends on what China's involvement is, Russia's involvement is, right? So there is we always knew we would get to this point of these decisions, right? Whenever it was. So, but here we go. Is the stock market around the world crashing? Yeah. And it does when there's uncertainty. And guess what war does? Like we said in the last episode, creates uncertainty. It chips away at people's confidence. It chips away at people's pride. It chips away at people's ego. That confidence deteriorates. That creates uncertainty. And there you go. So Bitcoin today is right around $72,000 at the time of this recording. And so what was it? Well, it was like 60 to 65 just a week ago. So why is this? Well, if you look at the Middle East and you look at South Korea, right? So you got this war in Middle East, but then you have South Korea. Look at their KOSP. That's their stock market, if you will. It's down 12% in a single day. It's their worst crash in the history of that market. Okay, worse than 9/11. Worse than 2008. Okay. Now you look at the Nikkei, the Japan's Nikkei, it's down over 3.6%. The German DAX down over 3.4%. The Dow down 1,200 points at its lowest day at the time of the recording. Nearly 90% of all S&P 500 stocks in the red. 90% in the red. Trillions wiped out in days. But like we talked about in a couple episodes ago, what is money? It's a calculation in a spreadsheet. Money isn't shifting from this vault to this vault in real time and just the workers with pallets of dollars going back and forth into vaults that are labeled different things. No, it's not what's happening. It's all electronic. So trillions of unrealized paper dollars have disappeared. Will those come back? Sure will. Why? Because we're going to put numbers into the machine, hit enter, and there it is. Okay. But here's the thing. When we're talking about physical assets, when we're talking about things like Bitcoin, which is up 6.5% in basically 24-hour period. Okay. Now, $320 million in short positions against Bitcoin have liquidated, meaning people that bet that Bitcoin was going to keep going down, Bitcoin went up, all those positions liquidated. $320 million worth, like that. Okay. That's the risk that some people are willing to take. The gain is worth the risk if it's calculated, right? Now, here's what the markets just told us. This is important. So I need you to listen. Okay. Paper assets are somebody else's promise. Real assets are nobody else's promise but nature's. What do I mean by that? What are paper assets? The stock market. Now, let me make this clear. I am not giving you investment advice. I'm not telling you what to do with your money. This is educational purposes only. I am not your financial advisor. This is just for information, education only. Okay. Now think about this. Paper assets are somebody else's promise. Your stocks, it's a promise by a corporation. Bonds, a promise by a government. Your 401k, it's promised by Wall Street. Promises, guess what happens during war? They break. They're not guaranteed. And that's why when you go into these paper assets, what do they tell you? Future results aren't indicative of past, or past results aren't indicative of future results, right? There's going to be a risk. You could lose money. You will lose money. You won't lose money, right? They tell you, put money here. But what do people do? Where else am I going to put money? That's easy to put. That's liquidity. The liquidity of paper money is the ease that attracts people to put their money there. Lazy money. And lazy money gets transferred from you to people who are not lazy, who are strategic, who have a plan, and your wealth is being transferred to them. Okay? During war, these promises break. The value of currency drops, like we talked about in the last episode. Okay. So when you have South Korea, which was one of the world's hottest markets, it was like gangbusters. It was up 45% in two months. Okay. But what happened? There's a war. Okay. Now 12% is gone in a single session. It's specifically to South Korea. Okay. Samsung. Great company. I have their Galaxy phone, right? That's the Android I use, right? We have my computer monitor right now is a Samsung. My TV is a Samsung. Down 12%. Okay. So while Bitcoin was dropping and these stocks, these paper assets were going up, what happens? Paper assets go up, go down. Then what happens if Bitcoin goes up? Why? Because it's finite. It's a physical asset. So not because the war is over, but the Bitcoin doesn't have the panic of a CEO running a corporation. There's no government structuring it. There's no decisions other than you and I putting money in or out. Something you need to be aware of. The wealthy, the ones that are prepared to have wealth transferred to them, they don't celebrate these events. This is not a comfortable thing. And the reason being is most of the wealthy are business owners. They have people that have worked for them. They know people, they care about people, they know people by name, they know their kids by name. They've been in their lives for 5, 20 years. But here's what the wealthy do. They prepare for this type of stuff. It's going to happen. They have a plan. They have a structure. And they just stay disciplined to that. One of the most disciplined athletes that I've witnessed would be a Kobe Bryant, right? When it comes to investing, would be Warren Buffett. Both disciplined, just in their different outcomes of what they were good at and what they were disciplined in. So in a plan to prepare for wealth to transfer to you, you need to be disciplined. You need to be prepared for that. Okay. You need to have a plan structured. And it's really hard to do this when you're on your own. A lot of times it's better. This is why athletes still have coaches. This is why some of the top wealthiest performing individuals out there have coaches. They do. They have coaches. They have people to keep them focused. Doesn't mean that they should have less egos or anything like that. But they have coaches that help them, guide them in directions, because it's easy to. It's why airline pilot. There's still pilots in the airplanes, even though we can have drones that fly everywhere. Because whether an airplane, you and I feel better when we see a pilot in the airplane. And when the airplane veers off path because of turbulence, what do? They bring it back on course. The plan is to keep you on course. Doesn't mean there's not going to be some turbulence in this planning process, but it allows you to bring everything back to your course. And so you can get to that destination. Okay. This is really important in understanding. So This is why when you work with people that are on your team that only focus on paper assets, oh, don't worry, the markets will come back. But that may be true, but shouldn't you have some sort of diversification, uncorrelated assets, so you're not worried about that? Not real estate investment trusts. Well, I own real estate. I have a real estate investment trust. No, you're not in real estate. You're still in paper assets. Okay. You need to diversify. You need to be out. Your financial planner, if you're working with a financial planner, is not compensated to tell you to put your money someplace else. They're compensated to tell you to keep your money where you're at, where it's at, and to just be patient. But it's not their money. It's your money. But again, trying to be confident, be a coach, be a mentor, but they're not basing it off of a holistic understanding of other assets that aren't correlated with what they're at. Okay. So it's pretty important to understand that. Okay. So you need to diversify into assets that really the government can't print, politicians can't make promises on, wars can't destroy. So yes, metals is important, energy is important, real assets, business, real estate, Bitcoin, those types of events, those type of assets that allow you to have a plan that allows the inflation to cause those assets to go up versus the inflation causing other assets to go down. Now, having some equities, yes, very important. Which kind? Well, it depends. I have my own opinion. And again, not investment advice, but I have my own opinion on what equities make the most sense. And so if you're a member of ours, more than likely you're going to have a videos that gets sent to you talking about that, right? Discussing that, or conversations that we have live talking about that, of what our opinion is, because we're looking at a holistic plan with physical assets as part of this uncorrelation of your wealth in a plan, but having very structured, balanced focus on what this looks like. And that is diversification. You don't want duplication, you want diversification. That's the key. So thanks again so much for joining us and being a subscriber. If you're not a subscriber, hit the subscribe button. We drop episodes every Thursday. Thanks so much for being a part of this time and investing your hard-earned time here. Make it a great day. Bye-bye.